Hey guys, I'm David Mitchell, founder and CEO of TRADEway. What if God himself gave you a blueprint for how to handle your money? Well, the Bible is a practical book. Let's dive in and see what it has to say about wealth, about risk, about leverage, and about investing, and uncover how trading in the stock market can be a powerful tool for moving towards your biggest goals. We're so happy you're here. This is The Word on Investing. Hey guys, glad to have you back with us today. You know, we've been talking about how important it is to know a little bit about your own finances. You know what? You think about this. How many times have you gotten on an airplane and you wondered, wonder what the pilot did the night before? So at TRADEway, we like to talk about learning to fly your own plane financially. Now, if you had the skill sets, you'd probably like to be in control, wouldn't you? I know I would. But anyway, that's kind of an idea we need to be thinking about. So one of the things you can do with TRADEway, you can go out to TRADEway.com and you can register for our 2-day event called Step 1 Start Your Journey. That is a great way to do this online from the comfort of your own home. But what's it going to do for you? Well, number one, you know, if you've been around a while, you know that in the year 2000 and the year 2008, your financial advisor probably lost somewhere between 20, 30, maybe even up to 50% of your total money in the whole world. Why? Because they tend to leave your money in the market all the way to the bottom of these bear market crashes. That is totally unnecessary. So one thing you can accomplish with TRADEway is you can learn how to manage your financial manager and never let someone else lose 30% of your money again. That's pretty big. But more fun than that is learning a little bit about trading. What's the difference between long-term investing and shorter-term trading? And of course, we're not talking about day trading. I don't advocate that. I don't believe you can win at that over a long period of time, but you have the potential to win when you get the math on your side if you're doing proper trades. What is a proper trade? Well, that's allowing the stock itself to show you what its cycles are, and they're never daily. So it could be 2 weeks, 3 weeks, 6 months, but they make little cycles and they make patterns, and all these things are skill sets that can be learned. And we talked about really recently 3 great philosophies inside our system that really help. And the first one is the 3-legged table. And that is fundamental analysis, technical analysis, and market tone, and how you need all 3 of those before you hit the go button on a trade. They need to all 3 point the same direction. The second big idea is getting the math on your side. It's all about probability math. That's what the big boys on Wall Street do. We're going to show you how to do that. You have the potential to win big when you win, lose little when you have an expense, and that's the key. And then the third big idea is leverage the big boys. What if we could show you a way to figure out when they're getting into a particular stock, and you could get in right after they got in, and we could show you how to know when they're about to get out so that you could get out of the play before they get out of the play. Could you make some money? I think you'd have the potential there, because why? They spend millions and millions and millions of dollars on research. And why not leverage the time and money they spend researching these great stocks? And at TRADEway, we can show you how to go in and find these. In fact, when you get involved with a thing we call the insider programs, we give you a couple of baskets of stocks. One, stocks that are less than $30 per share that have good fundamentals, and then an A-plus list, stocks greater than $30 per share that have fantastic fundamentals. So the fundamental analysis is already done for you. And if you don't remember what that is, you can go back and listen to a previous show. But the fundamentals are done by us, and you have these great baskets of stocks, and they're the right kind of stocks. Almost anywhere else you go, they're going to be the wrong kind. They're going to be value stocks. They're going to be blue chip stocks. That's not what you want to trade with. You want to trade with what we call growth stocks. And in previous shows, we've discussed what that is too, if you want to go back and catch those. But here's the thing. You're going to have a basket of growth stocks, so you don't have to do the fundamentals. And then the second leg of the trading table was technical analysis, and we talked about that in the last show. If you want to go back and catch that today, I want to talk about the third really important, maybe if you grouped them in order of importance, this would be number 1, and it's called market tone. So let's talk about that a little bit. What is market tone? Well, Market tone has to do with really two major components the way we teach it, the way our family's done it for 4 generations, now 5, and going into our 6th generation with my grandbabies learning these skill sets. And two major components. One, I call it the news component of market tone. And the second component, I call it the S&P chart, learning how to chart the S&P and understand what it's doing. So you have those two major components. Now, here's the cool part. When you get involved with the 2-day event called Step 1 Start Your Journey, you're going to learn a lot about charting. You're going to learn how to chart the S&P Index. And what is the S&P Index? Well, it's 500 of the best stocks in the world, all different kinds of industry groups in there. And I believe it's the best overall view of what the whole market's doing. Is the market happy today? Is it moving up? Is it gloomy? Is it moving down? Is it making any patterns? Where are we in the life of this particular bull market? Is it about over? Are we about to go into a bear? Are we at the very beginning of a new bull? Where are we? So you'll learn all about that and how to do the charting of the S&P. That's really important. In fact, you can learn that in a couple of days and get pretty good at it. And then the more practice you have through the years, the better and better you are. Now, the news component, on the other hand, when we talk about market tone, the news component, that takes longer to learn than anything else in stock trading. It really takes trading through quite a few bull markets and bear markets and bull markets and bear markets and corrections and news events and seeing what the market does and how it responds to various types of news events. Now, remember, the stock market is emotional and the bond market is mostly intellectual, but we're primarily dealing with the stock market, so it's emotional. So news really, really affects it. But how do you know what news is real and what news is fake, as President Trump might call it? Well, it's important to know that, but it takes 3 to 5 years to get good at it. So guess what? If you're part of the Insider program, we're going to help do the market tone for you. You're going to get a market alert every day, some days more than one market alert, where I come in or one of my staff comes in and we show you exactly what the key news components are right now and what those news components are saying and how the market's responding to them so that you can get that news side of market tone done for you, because you won't be good at that for a long time. In fact, if you try to do it yourself at first, you're going to mess up. So trust me on that one. It takes years to know what news is even something you should pay attention to. So I'll give you a clue about that right now. The truth is, at any given time, there's hardly ever more than 3 key events, words or phrases out there in the news that even matter to the stock market. Usually it's 2. Sometimes it's just 1, but usually it's 2 key events or phrases or words that when you see those in news items, they do make a difference on the stock, what the stock market's going to do. And so one of the things we help is to teach you how to begin to recognize what those are. And if you're part of the Insider program, then you're going to know, because you're going to be getting market alert emails every day that tell you what the key words are. And they last for a few weeks and then they change, or one of them may drop off and you have a new one with the other one that was already there, but they change all the time. So you have to always be paying attention to that and knowing what the key phrases are, 1, 2, or 3 of those key phrases out there in the news. And the rest of the news is noise, really. So learning that really helps. We're going to help you with that. We're going to hold your hand with that for the next 3 to 5 years. And then eventually you'll get to where you can understand that better. But it's very easy for us to do that with you. What we want you to get really good at is the technical analysis. We sort of do the fundamental analysis for you and the market tone, and that's all part of the Insider concept and program. And but the technical analysis is what we want you to practice at, get really good at it. So go back and catch an earlier show if you want to get a review on what technical analysis is all about. Now, let's get back to market tone, though. If we want to talk about the news component, let me just give you some ideas of what that looks like. Okay, so for one thing, you have earnings reports. The SEC requires companies to do earnings reports once a quarter. So 4 times a year, you just get inundated with every publicly traded company in the country, in our stock exchanges. They're all going to do their earnings reports. Now, one of the key things you're going to learn with TRADEway is when you're learning to trade, you really want to get your trade over and done before the day of the earnings report. Why is that? Well, because you can't predict it. we've seen so many cases where the earnings report was fantastic and the stock went down. In other cases where it's a sorry earnings report and the stock goes up. So it's kind of unpredictable, especially for new traders. So rule number one, be out of your trade before the day of earnings report. And it's easy to go out. You can use Google or Yahoo Finance, type in your ticker symbol, and you can know when that earnings report is going to be and make sure your play is done and over with before that day happens. So that's the way to start out. Now, we have some advanced courses we teach that are really good, one in particular called News Moves, where we will teach you how to use news items and even earnings reports to actually have the potential to make money. But unless you know those skill sets, you need to stay away from what we call newsy plays. In other words, be out of the market before the earnings report happens. But then there are other things out there like mergers, where two companies merge, acquisitions, spin-offs, where maybe a big company has a really successful division, they spin it off and it becomes its own company. And those can be a good thing or a bad thing, and you need to know the difference. And so you don't want to do plays based on these things unless you really know the difference. And that's one of the great things we talk about all throughout the TRADEway system. And you have other things like stock splits. How does that affect what the price of the stock is going to do? You have things like share buybacks. What does that normally do? Well, think about that. A lot of these, you can use some common sense, but it's more than that. You also need to know how the big boys react to these things before you try to do strategies based around them. I mean, we've got a home study course all about news splits that you can get access to, but you need to make sure you know the skill sets around each one of these types of newsy events. What about share buybacks, though? Think about that. Use some common sense. Let's say that the Fed goes in and decides to lower interest rates so that all these big corporations can get what we call cheap money. They can go borrow money at banks for really low interest rates, and they'll go in there and buy back 1 million or several million shares of their own stock. What happens? Well, think about the law of supply and demand that God put out there in the universe. What happens if all of a sudden demand stays about the same, but the supply is reduced because this company has just pulled so much of its shares off the market, they're no longer available to you or anyone else out there. So if demand stays about the same and supply goes down, the price has got to go up. So when you understand things like that, when you read about certain companies doing stock buybacks, that's a clue that all other things being equal, it has the potential to move up. That stock price does on that particular company. So there's an idea of how market tone can affect a play you're in. Think about this. You have upgrades and downgrades. That's where analysts come in and study companies and do an upgrade or a downgrade based on whether they think the stock's going to go up or down. And I'll tell you about those just in a nutshell. I don't pay a lot of attention to those. They do affect the price, but only usually for 3 or 4 days. And then the stock is going to return to whatever the market thinks it should, because upgrades and downgrades, that's just one man's opinion or one company's opinion, and it doesn't hold out for long periods of time usually. So it does have an effect the day it comes out, and but sometimes it has no effect when it comes out. So that's not a huge thing, but just be aware that they exist. And then what about a company that comes out with new products? Well, think about Apple. There was a time, if you're old enough to remember this, there's a time when Dell almost put Apple out of business. I mean, the only reason Apple even stayed in business is because they sold products to school systems, and that was their market niche. And so that kept them in business. But guess what happened when they came out with this new invention called the iPod? That company turned into a brand new growth company. Not that the company was new, but it was a growth company again for the first time in many years. And the rest is history. I mean, then they come out with the iPhone, and the rest is history. And then all of a sudden, somehow they got the whole world to believe that an Apple Mac, a MacBook Pro is better than a Dell computer run on Microsoft. Maybe because it won't get viruses, and maybe because it doesn't slow down every year you use it. It is better. I don't know, but they convinced us all it's better. So the rest is history. So yeah, part of market tone is recognizing when companies come out with great new products. And then what about if they get a new CEO? This is one of my favorite ones, because a lot of times companies need one. I'll give you an example. Now, this is personal opinion, but I think American Airlines needs a new CEO right now. Why? Because their whole corporate culture stinks. And how do I know that? Because their hub is in Dallas, right? And so our company's near there. So we fly out of there, and you can go anywhere in the world nonstop with American. And they have the greatest pilots, but their culture is not good right now, and everything rises and falls with leadership. So what if one day you woke up and you read that the CEO of American Airlines was ditched by the board and they've hired this great new CEO that Wall Street loves? Well, if Wall Street loves the CEO, that stock has potential to move up. So always be watching for new CEOs. There's another market tone component. And then the most important thing that we're really looking at all the time, every day, is world news and economic news. Those things affect the stock market all the time. And like I said, there's usually one or two or three keywords or phrases in the world news that really are affecting the market right now, or even in economic news. And I'm combining both. World and economic news combined, it's usually one or two or three key phrases among all of that that really matters right now. And that's where the Insider program comes in so well, because you're going to get that market alert email every day, sometimes more than one, talking about those key phrases so that you can just screen out all the noise, the other news that really has nothing to do with what's going to happen. And it's so helpful because you'll even have news items on the particular stock you're in that really may not even make any difference. And you'll see a whole lot of news items where they're trying to get you to buy certain types of stocks. Never pay attention to that. I mean, that's a rule we teach all throughout, is you never let someone else pick your stocks for you. You need to be able to know what kind of stocks you want. Most of the stock pickers out there pick value stocks or blue chips, and they're not what you need. You need growth stocks. So just grab them out of the TRADEway basket called the A+ list. You get that through the Insider program. You're going to have over 100 stocks at any given time that are always changing. We're putting new hot companies in there, pulling out ones that aren't so hot anymore, keeping it fresh for you all the time. And you just pull one or two or three out, start looking at the charts, find the prettiest charts. You might look at all of them, actually, run them all through your charting system, and then pick the 3 or 4 prettiest ones and go from there. So the news component, though, is going to affect those charts, affect those stocks, because it's going to affect the whole market. And remember, you want to try to do your plays that go in tune with the market, go with the flow. So if you're doing an up play, like buying a stock or buying a call option, then you want the market to be happy. You want the whole market to be moving up in an uptrend and happy. And so that's where market tone comes into play. That S&P chart component of market tone is the other half of the equation. You got all that news, and we're going to help you with that. But the charting the S&P, you can use moving averages over long periods of time. It tends to like to bounce up off of a certain one. Like a lot of times it's the 50-day, but right now let's put it this way. It's usually the 20-day. Right now it's the 10-day because the market is so hot. But remember, when you hear this, it's not going to be right now, right? So you can't go by what I'm saying here. You just have to look at the chart and see which moving average does the S&P index like to bounce off of. And it's usually going to be the 10 or the 20, but it could be the 50. And whatever it's been doing for the past year, it just tends to keep doing that for long periods of time. And individual stocks do the same thing. One of the cool things about being part of the Insider program is you get a thing called the David Mitchell settings, where you can set up your charting software the same way I have had mine for 30 years, 35 years. Time flies when you're having fun, doesn't it? And, it'll have the 10 and 20 and 50-day moving averages set up properly. And it's going to be just like the big boys are looking at, because they use those same averages and they cause the stocks to move anyway. So if they want it to bounce up off the 20, that's going to tend to be what it bounces off of until some major news event messes up their plan. And then it might be what we call a little correction, or an anomaly could happen, but then it'll go right back into the pattern the big boys want it to. There's usually 2 or 3 big boys, and these are guys that can control millions of shares of stock because they're trading other people's money or other companies' money or the government's money or Baylor University's money or whatever. And they can jump in and buy or sell millions of shares at any given time. 2 or 3 of those kinds of individuals can turn a stock. And so you're always watching that S&P chart, and you're watching the particular stocks you like, watching those charts, and try to get them in sync, where if you're doing an up play, the S&P is also in an uptrend and it's happy. That's the kind of area where market tone is so important. Most people don't even know this, and they go out there and they try to Google how to trade, or they go to some seminar on how to trade where they really are not traders. You would be surprised how many of those people are professional speakers and they're not really even trading. But they'll go all about the charting, and they don't ever even point out that charting will not work by itself. You have to know the fundamentals and you have to know the market tone, and put all three of that, or put those two anyway, with the third component, which is charting. And then that's what gives you the potential to have great trades. So we're talking today about how market tone fits into that. Now, if you want to really get good at this and have the potential to do some really good trades, then go out to TRADEway and sign up for our next 2-day event called Step 1 Start Your Journey. You can do it all online from home, and you're going to learn in detail about these things we're talking about here. So how does market tone fit in? Well, you got all these things like earnings, mergers, spinoffs, stock splits, upgrades, downgrades, new products coming out, new CEOs, and most importantly, the world news, world events, economic news. What 2 or 3 key phrases are moving the market right now? Those things are so important. You can learn all that over long periods of time, but you can also get access to it instantly as a TRADEway insider, where you're going to get that newsletter every single day. Market Alert's going to tell you what the key news components are and how they're affecting the market today. Tell me that wouldn't help. I know it'll help because most of you guys don't have a clue about market tone. Why? You hadn't been trading 35, 40 years and watching how the news affects the market throughout bulls and bears and bulls and bears and squirrels. What's a squirrel, by the way? Well, you can't Google that one because I made the term up. But a squirrel market is just where the market is so unpredictable that if you're a new trader, we advocate going to cash and not even trading. And those happen, except for a brand new bull market, the very first year of a bull, where you don't usually have a squirrel market the whole year. You'll have a year with no corrections. Once you get past that year, the second, third, fourth, and on out into the life of a bull market, these squirrel markets happen roughly every 3 months. And so you'll have 3 months of pretty predictable uptrending in the S&P chart, and then you'll have a correction. We call that a squirrel market, where you need to just not trade. And those usually last on average 6 to 8 weeks. So think about it. Just knowing that is powerful. If you know that at roughly every 3 months, you're going to have a correction, and that's going to last 6 to 8 weeks, and then a new dependable uptrend is going to happen, that really helps your trading to know that. So these are all things that have to do with market tone, because remember, it has 2 components: the world news, economic news component, and the S&P charting component. And that charting component is where you start to learn things like these corrections happen on average about every 3 months. So when you get towards the end of a bull market cycle, which then your strategies change a little bit. So that's why it's great to learn so many of the strategies that we teach at TRADEway. I mean, goodness, we got around 40 plus strategies. You're not going to master them all, but you need to have them in your mind and then choose a couple to master, 1 or 2 at a time. Once you master them where they're like second nature, then you go master 2 more and you keep doing that. And so that way you have several strategies, because you need different strategies because they don't all work during certain phases of the life cycle of a bull market. Sometimes regular step 1 and step 2 plays like buying calls and buying stocks work great. But sometimes when the market gets tired, it's going sideways, you need something like a credit spread, which is a completely different strategy. But then that works because the market doesn't need to go up or down. It has the potential to make money just going sideways with a credit spread. So those kinds of things are cool to learn. You learn a little bit of that over time, 1 step at a time. And remember, this is not rocket science. It's just skill sets. So you want to get a good overview of the whole thing and learn as much language as you can really quickly, but realize you can't master it all at once, so you don't try to. We're going to guide you with that. We're going to help you with that to master 1 step at a time. There's one really cool key we teach in our 2-day event called Step 1 Start Your Journey. And there's a phrase Wall Street uses. It's called buy on rumor, sell on news. It doesn't really mean what it sounds like, because so many of us are used to going to church where people have rumors and gossip, right? At church, a rumor is a negative thing about another person that's probably not even true, right? It shouldn't be that way, but that's the way it is. Wall Street, that's not what it is. Wall Street, when they talk about a rumor, it's actually usually a true news item. And what makes it a rumor is the big boys and the at the trading desk on Wall Street and the market makers, those guys get the news before we get it. So to us, it's a rumor. To them, it's news they got early, right? And they're going to act on it. And so that's why it's so important to be really careful doing what I call news plays, because they get the news before we do. By the time we get it, they've already done their play, and we're on the wrong end of the play. So you need to know that, right? So don't buy stock because your aunt says to buy one or a neighbor. You need to understand the fundamentals, the technicals, the market tone, how it affects your particular stock and why you're doing your particular play. Don't listen to other people. But what does it mean, buy on rumor, sell on news? Well, you can start to hear news that is about to come out on a particular stock. And what's interesting is the big boys generally have already heard that news and began to buy into that stock. And you'll see the volume bars will be higher than the day before. And we taught that on a previous show if you want to go catch that. But you can see on a chart through the volume bars how and when, not how, but when the big boys bought a particular stock, because it will move the volume. They can't hide that. So when they jump into that thing, they bought in on the rumor. In other words, on the news that they got before you got it. Okay. Now, a lot of times, they'll be talking about the Fed in 2 weeks is going to come out with a Fed announcement, and they're probably going to lower interest rates, which the market loves that. And the market's going to zoom up. And you're thinking, oh, wow, that's cool. I'll just wait till they do it, and then I'll buy a bunch of stock. Well, what you need to realize is the big boys have already bought into that rumor because they buy on the rumor. So they're buying in for 2 or 3 weeks before the event takes place. And then on the day of the earnings announcement, or in this case, the Fed announcement, they take their profits. And all of a sudden, the stock that you thought would move up because they lowered the rates goes down, and you lose your money. And so think about that. Buy on rumor, sell on news is an interesting formula to understand that the big boys are jumping in before you do, and about the time you do, they're jumping out and driving your price down. So learn to trade like the big boys. You need to trade before the news event happens. You need to already be in doing your play, and then you probably need to get out right before they get out. A lot of times they get out on the day the news happens, so you need to already be out of your play. See, little things like that can totally change your success or lack thereof. So this is where TRADEway can really help you. My family, I'm a fourth generation family businessman. I learned to trade from my grandfather and my dad. And they don't trade like you learn in the MBA program, because all they're about is fundamentals and value investing and all that. They traded growth stocks, and they learned to have the fundamentals down, the technicals, and the market tone. And so that's what we teach. Now, we have this cool phrase we invented called the Squirrel Market. I touched on it earlier. But other than the first year of a new bull, your market is usually going to correct about every 3 months on average. And when it corrects, that means that the S&P breaks down through its support line on higher volume and remains down below that support line. And a lot of times that line is at a 20-day moving average or a 10-day moving average or something. And it breaks down below those lines, and it goes down for sometimes 6 to 8 weeks before it moves back up and starts making reliable patterns again. So we call that period Squirrel Market. And brand new traders should just be in cash and not even trading during those times. And then when it's had 6 to 8 weeks, by then you can learn to draw and use support and resistance lines on the S&P chart. And about the time you can do that, then the market becomes more predictable across the board, and your stocks are probably starting to make predictable patterns again. And when we say predictable, remember, that doesn't mean you can tell the future. It just means repeating patterns that might happen again, and we're playing the probability math there like the big boys do. So remember the idea of the squirrel market. Mostly don't trade during those when you're new, and they happen roughly every 3 months. You'll have a correction, and that creates what we call a squirrel market announcement. And we'll send that out in the insider program through the market alerts. We'll say we're announcing a squirrel market. So that means, most of you guys need to stay in cash 6 to 8 weeks. We will let you know when we feel like it's over, etc. So think about that. If all you knew is when not to trade, would that help you? I guarantee you that's what most people need to know, is when not to trade. There's one other thing I'll mention and we'll be done for today. A thing called amateur hour. Here in Texas, the market opens at 8:30 in the morning. We never trade. I say never, but as a new trader, you should probably never trade the first hour, because that's when amateurs are punching the buttons and making some trades and then running off to work. And usually the professionals on Wall Street watch for about an hour, and then they wait until those amateurs are done and they kind of see what the market's doing, and then they start jumping in and doing their trades. So we don't like to, generally, we don't like you, especially if you're new, to do your trades during amateur hours. So by 9:30 Texas time, give it another 10 minutes to be good and over, 9:40, 9:45. Then you can start thinking about placing your trades. So don't trade during amateur hour if you're a new trader. So those are cool little things that you're going to pick up in step one, start your journey, our 2-day event. Go out there to TRADEway and sign up for one. It's awesome. You can do it from home. You can do it on the internet, and you'll learn all these cool concepts. All right, well, that's about it for today. So if you love what we're talking about, be sure and rate and review our show. And it's a great way to get other folks that think like we think to get on and find us. And we'll see you next time.